So look at the blue triangles showing you where buy imbalances are coming in. These are people who want to buy it. They haven't bought it yet. All in here. Look at this. 1, 2, 3. This guy comes in. But watch what happens immediately. You got to be anticipating this and focused. As soon as the blue came in, the pink came in right on top of it. Let me back it up a second. Let's do it again. As soon as we start trickling lower, we breach this blue triangle, not bearish yet, but you are bearish below here. It's like, boom, boom. You can't be long anymore. Let me pause it. You can't or shouldn't, if you're long, stay long. And if you're aggressive, maybe get short and risk above these three triangles. And remember what I said, every trade is good if you have good risk management and know where you're going to get out before you get in. But watch, so you get this blue triangle showing you, oh, we want to buy it. And then right away, oh, we want to sell it. Who loses? Well, as soon as it jumps back into this imbalance in the blue triangle and doesn't create another one, and in fact shows, let me pause it again, that the sell imbalances could be chasing it. You see the second the second pink triangle. If you're still long, you got to get a CAT scan. And now you're a victim of this. This is predictable. It's not hindsight. You have to analyze, you have to anticipate the right stuff. If you anticipate that the guy in front of you is going to stop before you see the brake lights, you're a better driver. If you anticipate that this market's going to chase out some longs and sell off because of the triangle imbalances that we show you, you put yourself in a position where your predictions do not feel like guesses. You do not feel you're lucky. But again, back-to-back sell imbalances show the imbalance on the sell side's chasing price, and price going to possibly run away. Plus, it breaches not only this blue triangle, but look at the blue triangles that is forming an area. Look at this. It's forming this area. So when you breach this shade, this yellow shade, this happening just has a high probability because you're finally through where buyers were defending and they're no longer defending. And if you don't have buy imbalances, you have no support for price. You just don't. Price, in order to stop going down and go up, essentially that's what the definition of support is, right? It goes down, it finds an area to stop and then re-rally or bounce. Then what creates a stop and then a pop for the price of anything would be a buy imbalance. Buyers that show up and say, we want to buy it, and there's a lot more of them than the people who want to sell it. It doesn't matter what it's the price of. The dynamic has to exist of more people who want to buy it than people who want to sell it. And remember the word want. People who want to buy it. They didn't buy it already. They want. I spelled what. That shows you how smart I am. Want. They want to buy it. They want to buy it. If I'm teaching you grammar or spelling, then you can make fun of me. But if you aren't focused and understand that that's what moves price, you have no business predicting it. Think about the housing example, for crying out loud. If someone is wanting to buy this ridiculously ugly house, but there's 5 of them who want to buy it, and there's only obviously one person selling this house, where's price going to go for this house? It's going to go up. These people didn't buy it yet, but they want to buy it. If you knew it was 5 to 1, 2 to 1, 3 to 1, and your job was to be like, where's the price of this house going to end up going for? You would have a better chance at predicting that's going to go higher because you got some inside information that there's an imbalance of people who want to buy it versus people who want to sell it. And then if you had a little bit more information, like there ain't no houses like this in a subdivision. Oh, so now these buyers are even going to be more emotional potentially, right? Then you had some information that the seller, they're getting divorced. That actually make prices go down. So that's a good example on downside for the other way. But if you could put yourself in a position to understand what people want to do, you could attach emotion because then you can get into what they have to do. Want to do, have to do. When they want to buy it and there's an imbalance of it, you get a blue triangle. And then if they want to buy it, and you could say they have to buy it because there's more shorts than longs. But shorts are greater than longs, right? If there's more shorts than longs, then there's more buyers than sellers, and then they have to buy it. So now you even quantify the type of buy imbalance it is. And we're showing you both. We're showing you the people who are long versus short, and we're also showing you the imbalances as they come out real time and as they change. So if we back this up, and where's the laser? The laser's green. It just was red, more shorts and longs, it goes up. Boom, more longs and shorts, it goes down. So you got more longs and shorts in here. You got the sell imbalance chasing. If you stayed long, you got to go for a CAT scan.